When dealing with repair jobs that involve insurance estimates, there are important considerations to keep in mind regarding sales tax liability. In 2017, the Texas Comptroller, an administrative law judge, ruled that a collision repair company's billing customer through a lump sum receipt is responsible for remitting sales tax. For a deeper understanding of lump sum receipts versus separate receipts, please refer to the video on repair invoices. However, if your business involves insurance where customer paid the deductible amount and the insurance company directly covered the remaining amount, you need to pay close attention to the insurance estimates. Even if you charge a lump sum, you could still be liable for sales tax. Insurance estimates often itemize materials and list material sales tax separately. The Texas Comptroller may require you to remit these material sales taxes. From their perspective, the payment you receive from the insurance company includes the sales tax for materials, so you must remit this sales tax to the controller rather than keeping them. On the other hand, if your company collects the entire payment from the customers and the customers then files a claim with the insurance company, you can demonstrate that there is no direct insurance payment involved. In this case, you will not be liable for sales tax. For more information, please contact Ansari Tax Law Firm at 888-577-1482.